Hey traders, Wednesday afternoon, pretty interesting day. Red scoreboard, normal red day where the markets are down 0.5 to 1%, and the VIX is up a little bit under 1%. So this is like old school normal day. But the point of this video is to remind the members who actually subscribe to my daily newsletter and write-ups throughout the day and the live trading room, which was a lot of fun today. We basically paid the bills for hundreds of people. At least they had the opportunity to. Anyway, we did some fast trades that cannot be written and disseminated in time. Therefore, you have to be in the live room. If you're lucky enough, I invite you to check it out. But you have to be a paying member first. But this is to remind those members of the tool they have that comes into their inbox in the morning or posted in the chat room, which is the morning write-up. So I'm showing you the price action late in the day today. These are 30-second charts to illustrate a point. These are crazy markets. And to do it alone without a plan is ridiculous. You're just hoping for the best. That's not a plan. So my efforts is to hone everybody's expectations so we are not surprised, because if you're not surprised because you know the potential of the day, then you're less likely to chase at the wrong time. Like if you see a stock falling, our instinct as humans, we chase. We want to chase the fall. If we see it rally, we want to chase the rally. And most often, unless you're super good or super lucky, you're going to end up getting hurt financially because of it. So how do you tone down this potential? I can't eliminate it, I can reduce it. Well, it's very easy. All you have to do is read the morning note, which I provide in ample time before the morning opens. So by the time the market opens, you have had the chance to read and look at charts with arrows as to what are the possibilities. So let's revisit that. So if you like this video, before I forget, hit it a like and discuss it. If you have questions, there's the comment section. I don't lock it. You can say whatever you want. Also, subscribe to the channel. We've rebranded it. Thanks, Arlene. And if you want to become a member, I'll put a link up in the right-hand corner. It's not a free trial because it's worth all the money, but it's definitely, you can cancel after the first month. There's no obligation past that. Okay, so let's look at the morning charts. I'm going to jump into let's go to the QQQ, the less busy of the two. So before the morning started, I had this arrow down here. So the write-up had words. The words were simple. I said, my plan is, number one, this, number two, that. I had a very clear plan. I said, I want to chase a breakout, and I gave a value, or wait for the dip and try to buy the dip somewhere that is conducive to my portfolio. And I said, I will post it. And then I had these, everything in purple was there before the day started. So a dip was not a surprise because I said, I want to buy the dip or chase the breakout. Well, we didn't come close to breaking out, so buying the dip is what I'm looking at. Most likely taking longs here. So if we had collapsed into this area, I would have gone long, and I go back and I post the long entries for those who are not in the live room. These are trades I can share by write-ups because they're not so time sensitive. But the ones intraday, in and out, I can't. By the time I write it up, the opportunity is gone, and then you take it, and then you don't see the close, whatever. But these are slow-moving trades, relatively slow. So this I will update before the morning opens. But if somebody had known that we were going to dip, they're not panic buying puts because they know the opportunity is most likely. I'm not 100% certain. That's why they pay us. There's risk that there is a potential for buying the dip if and when it comes, cover the gap, and then have some higher highs. We have earnings coming. We'll see how the reaction goes. Netflix's earnings were incredibly strong. Reaction, not the earnings themselves. They were not incredibly strong. They weren't a disaster, so everybody's happy. Tesla's were strong, and nobody's happy because it's all about expectations. So let's give it a couple of days. Okay, so that's one. It's not a fluke. Here he was the SPY. Ignore these I did during the day. Believe me, they make sense. If you go down to 15 seconds, there are plenty of opportunities to trade that junk. They were perfect lines, but we go to, I think, 15 minutes is the morning note. So if you can make yourself blind to that mess, everything else was on the chart before the day started. Again, I was looking to either buy the breakout, and I gave the resistance zone, and I gave the breakout line, or buy the dip, and I also said somewhere down here I would buy the dip, and I said support, look where they bounced. So a warrior in the stock market would have read this before the market opened, would have been mentally prepared to watch this dip and know what to do with it. So if they were not very active trading, they would have said, okay, what's going on is what Nick said is going to go on, almost exactly. Follow along my purple line. And there is support. They could breach support, but for now it is support, and I will assume it's support until they don't. If they bounce here and come back and breach it, they can. But we had the plan of action for this. So if I read the morning note and I see this dip into a bull where Nick said he's going to buy the dip, I would have been more likely to buy calls or get long somehow, buy shares, buy calls, sell a put spread or something to capture this, and I would have made money immediately. At least I would not have been buying puts, getting short into this because of emotions. We see red ticks, we emotionally want to buy, follow down, panic out of longs, followed by shorting too late. All right, so this is the write-up, benefits of the write-up, and that's not it. We have the IWM as well. So I don't remember, honestly. Let's go find out what I did with the IWM. All right, so these purple lines were there. Exactly how I planned them out to be. I didn't know exactly how they were going to unfold, but I thought that if we dip, I want to catch this dip. And look, there's also a gap here. Most likely I will be taking long, active traders, whatever. And I also pointed out some levels I'm watching in the write-up itself. All right, so that's the three major indices, not the Dow. I don't trade the Dow because it's price weighted. So this is the SMP Futures. I do that here as well. That's probably going to be too busy for you to see anything. But here it is. Actually, it's not. Wow, that's even more perfect than I thought. Okay, so this was the SMP write-up, I believe. Was that today or yesterday? Anyway, no, that was today. So look, the proof that this chart was there before the morning opened. Look, see? And this is what transpired. Into my bowl, had I so if somebody took longs because they fell into support, these are major support lines that we've been tracking for weeks and weeks. That's the June bounce that we've lost before, but this week we need to recover and stay above. So I would not have been surprised. And I know where the sellers are. Sellers are lurking. I know where the resistance is. I know that this is a meaningful level, and that level was there before the day started. It's not showing up here. There it is right here. So they're on different time frame. So we know where the important levels are, so we're less likely to make mistakes. That's the point of the morning note. It's called a trade sheet. Every successful professional trader that I know has a day sheet. Usually they write it on a piece of paper. Well, I can scribble it for myself, but I like to share it in the way people make sense of it, so I decided to use purple arrows for my guesses for the day. So this is it. This is available to you as a member every day. So if you didn't know that existed, check it out. I think you'll be better equipped to handle the crazy days that we're having. This market is crazy. The professionals are losing money. The hedge funds are going nuts. We are succeeding in the short term. We are succeeding in the midterm with a little difficulty. For example, credit put spreads have worked, but they were tested last week, 2 weeks ago. If somebody didn't act on them properly, then they may have had a couple of losers. But most of them, if somebody acted on, they rolled out of trouble. So this is better than investing hundreds of thousands and then hoping for the best and then getting lambasted by the market. So take a few minutes in the morning, look over the morning note. Maybe there's nothing interesting. Maybe I miss it completely, but at least it's something. Having a plan is better than just winging it and playing it by ear.